everyone, Marvin here from StockMarketPlan.com with your Stock Market Watch edition for March 3rd, 2011. Market opened up today, gapped up higher. We had a nice overnight session from like 4 a.m. to 9 to the market open, 9:30 New York time, Eastern Standard Time. Market did most of this move during that time, and then it kept motoring higher once it opened up. We are continuing this consolidation pattern here, and I mentioned in the earlier cast that I'm going to be paying close attention to volume patterns, and this is what I'm talking about right here. Okay, high volume down days, no good. Low volume up days, no good. High volume down days, no good. Low volume up days, lower volume up days, not good, not desirable. It's still in advance, and I always say price first. Okay, I mean the Dow was up 200 something points today, and as you know, I've been a bull for a while, still a bull. Invested fully in my retirement accounts, and one thing to keep in mind is the market cannot take much of this volume pattern. It'll eventually weigh on the market. The other thing that I noticed is we gapped up today. Let me show you the intraday session. Here's the intraday session. Basically, this is yesterday's close right here, and then we go into the overnight. Right here is 4 a.m. and all of a sudden we just start trekking higher here. And I'm going to move here forward. So most of this move was done in the overnight. It wasn't done during our market hours. It was done overseas, and then we kept trekking higher. Now you see how it's just real. I mean, I kept saying to myself, boy, that's a huge move in the market, and I just don't see the conviction behind it. Volume was light, and I think it's ultimately people getting ahead of the jobs number tomorrow. Tomorrow we're going to have an employment situation number. I think it's at 8 o'clock Eastern Standard Time. And I'm going to be paying close attention not to the numbers, what the actual numbers are. I could care less about that. It's basically how the markets react to the number. And what I usually like to do is give the markets about 10-15 minutes to react, because you're going to get some wild swings in there. If you're looking at a minute or 5-minute chart, it's just it'll drive you nuts. Just let the market trade for about 15 minutes after the move, and then open at 9:30 in the morning, and then go from there. Again, looking at the daily again right here, still consolidating. There's a trend that we drew. Here's the second point of resistance that I see, which is the old high, the 134.69. Okay, and we can go through this and just consolidate here. That's fine too. So we're just going to have to see how the market reacts. I still think we should, but who cares what I think we should happen. But it'd be nice to see the market consolidate some more. I mean, this is just a huge advance, and the market needs a breather. It needs to trade sideways, regain itself, gain strength, and then set itself up for a more meaningful move with conviction behind it, versus just these wild gyrations like this. It's just hard for the markets to settle down, what's called basing out, do a nice base, and then go higher. Like here, you see how it just based out and then volume came in? I mean, same thing. So anyways, we'll just see how it goes. Again, this is Marvin from StockMarketPlan.com with your March 3rd, 2011 Stock Market Watch edition. Okay, so we'll just see how the day trades tomorrow. Look at those job numbers and see, if you can, watch the reaction behind it, and we'll talk about it tomorrow. Okay, guys, have a great one. We'll talk to you tomorrow. Bye-bye.